And we're live. Yeah, recording. Hello, everyone. Welcome to 28th of December. And we're not actually supposed to do sessions on the weekends, but we missed a session on the 25th, which was, I think, Wednesday. So the missed session, because I made the promise to everyone that any missed session due to the holidays, okay, so I have to take into consideration other people. Any missed session, we're gonna cover everything, and which is what we did. So what we'll actually do is, because I think next week around the 31st, which is Tuesday, we might most likely have a missed session. So to make up for that, we're gonna reschedule. I think 31st is gonna be Tuesday, so we're gonna reschedule Tuesday's session to Saturday. It's the same way we did for 25th this week. Okay. So Tuesday's session is gonna be rescheduled until Saturday. We're gonna cover that. Now, you guys are pretty much very far in the basics of ICT, and by next week, I want to get into the advanced concepts, the order blocks, irrigation blocks, everything. So before getting into that, need to do a total recap of everything we've talked about so far this week. And I'm going to cap everything off with teaching you guys about the days of the week when you should trade and why it's essential that you guys trade, how you guys should know what time of the week you're meant to trade. Okay. Oh, 31st going to New Year's. Yeah, exactly. I can barely hear you. I don't know, maybe it's your mic or something. Does everyone hear me clearly, or is it only, let's see, clear? Yes, clear, loud and clear. All right, so it is Peter who has issues, not me. Good. All right, let's do a quick summary to remove all drain tools. Go back to what we're talking about. So we actually started out the week with we learned about, let me do this way. So can you guys list what we've learned so far? I want to see you guys write a list of what we learned so far from Monday until now. Let's see the different replies. Look at our information. Okay. So far, what have you guys learned from Monday, Tuesday, Wednesday, Thursday, and now, I'm sorry, Friday, and currently Saturday? Open high, close low. Okay? Like close low. Victor says open high, close low. Let's see, let's get responses. USDX, SMT, divergence is now change. Essentials market structure, exactly correct. SMT divergence, correct. DXY, immediate highs and lows, correct. High time zones, Fibonacci DXY correlation, okay. EMAs, risk on, risk off, correct. Support resistance, long-term high, mid-term high, low, market bias, trading SL, shift market structure, the four cycles of market, lower highs, lower lows, ultimate entries using Fibonacci, DXY correlation. Okay, so far we've all learned shit, shit in the market structure. Okay, let's see. Okay, we are gonna do stay direction. Market direction. Right, so basically you guys all are familiar with what we've learned so far, and what I'm gonna do now is to teach you guys how to trade intraday. So how do you trade intraday? How do you look at the markets intraday? So it's time to get your notes because you're gonna write things down. We're gonna write things down. Okay. Right. So let's get this. Oh shit! Made a mistake. Oh come on. Made a mistake. Okay. Well, the first time we ever had 50 people on the call. First time. In a Telegram group of 85 people. First time. So there's currently 35 people missing this call. Okay. It's good. Recap. All right, recap. So let's do this quickly. So yesterday we talked about the EMEs, utilizing the EMEs, and I said when the 9 EMA crosses the 18 EMA, that is usually indicative of a trend change. Okay, and you only use these EMAs on daily timeframes. Okay, for example, if we wanted to confirm if there was a shift in market structure from here, what we simply do is go to your indicator and type in EMA, click that twice, get this, then you simply edit that out. I usually like to make the 9 yellow, so I'm gonna make this yellow, okay? And we're gonna make the other 9 18 because we need to watch the 9 and 18 moving averages. So 18, we would make this red. 9, 18, okay? So now, notice how when the market was on a downtrend, okay? Market was on a downtrend, the EMS crossed over to the downside, okay? So there was a crossing over of the EMS to the downside. These confirmed that there was a shift in market direction to the downside, okay? So what I'm simply gonna do is I'm gonna box this out from this point where the EMS cross. Notice how the 9 and the 18 EMS never cross until price gets to this region, okay? So they never cross until market gets to that region. Immediately they crossed, okay? Market went bullish. Notice how the market went bullish until this point where the EMS crossed again, okay? The EMS crossed again, the market started to go down. The market has crossed one more time, and the EMA is now indicating that it wants to go to the upside. Okay, so wherever there's an EMA crossover on your daily time frame, that usually indicates that there is a trend change. Okay, there's a change in market trend. So you start looking at one side of the market. So for example, when the market crosses over bearish, what you start looking for is sells, majorly sells, okay? Until the market crosses over around this level, what you start to look for is majorly buys, right? So, oh shit, now the 918 EMA crossover is to look for early trend changes. So you're looking for early trend changes, okay? Before any other person else is knowing about it, you already know when the market is changing directions. Now, the 18, let's make this 18. It's just red. And the 40, 18, 40 EMA. Oh, come on. Dark. Oh, shit. Okay. Okay. All right. So now the 18 and the 40 EMA is indicative of the market strength. How quickly is the market gonna move in direction with that trend? So I told you guys, if the once you see the 18 EMAs and the 40 start to fan out, meaning let's use this. So meaning if this, we assume this is the 18 EMA, and then this is the 40 EMA. Okay. Once it starts to widen, spread out, okay, it means there's lots of strength in that market, and you're gonna get really, really very calm moves. Okay, the market is gonna keep going. You're really gonna get deep retracements because there's a lot of institutional sponsorship up. Okay, after the 18 EMA has crossed over, you're looking at the 18 and then the 40 EMAs for market strength. Okay, how quick or how explosive are the moves going to be? Okay, and then once you start to see them fan out, then you would expect that your daily ranges are going to be big, very big daily ranges. So that is what makes the market go very, very vertical. Okay, so let's move first. And then we talked about let's see. So quick recap. Talks about looking at the daily divergence from with DXY, Euro, Pound, and seasonal tendencies. Okay, so there's a recording for all of that, which I covered, and I'm going to drop that link there for you. Any person who missed the session or who had issues can check that out. Okay, well, the other guys, okay, who keep missing sessions, I'm pretty sure, like, I think today or tomorrow, I'm going to kick a lot of people out of this group. So like I said before, if you're getting this free, it means you don't value it. This is why you're missing all the sessions, okay? Which is very painful. So now let's get to today's schedule. Let's apply everything I taught you guys before we start going into the really, really advanced stuff. Fair value gaps, equilibrium, premiums, discount, order blocks, okay, all those terms, everything. The first thing we need to do is to do a recap and an understanding of time and price. So what I wanted to do today is look at, let's look at the daily market structure, okay? What is going on every day in the market? So now, here there was a 1840 EMA crossover, okay? So what I'm going to do is I will divide the market into days of the week. Days of the week, go to session breaks. Okay, so this was Friday, Thursday, Wednesday, Tuesday, Monday. Okay, Friday, Thursday, Wednesday, Tuesday, Monday. Okay, Friday, Thursday, Wednesday, Tuesday, Monday. Now, if you guys paid attention to the first class you all attended, I told you 80% of the time, the low or the high of the week is most likely to form when, let's see, when is the low or the high of the week most likely, 80% of the time, most likely to form? Tuesday, London to Wednesday, London open. Exactly. Tuesday, London open to Wednesday, London or New York open. So correct. Now, if you notice each weekly candle, so I'm going to go break everything down for you guys, okay? Move our drink tools, move our indicators, chart. Now, if you notice each weekly candle, there always is the open, high, low, close. Okay, there's open, high, low, close bars. Like in every single candle, 1 minute candle, 5 minute, every candle has the open, the high, the low, and the close. Now, we all know that each weekly candle contains all the price action in a week, okay, on that particular currency. So you have all the weekly price action, all the weekly data feeds in 1 week contained in one weekly candle. So if a weekly candle has an open, high, low, close, that tells you in a bullish week, you're going to get the open and then the first move out of Sunday's open. Now, remember the market opens Sundays, okay? So the first move out of Sunday open is the false move. Because if you're going to get a bullish week, right? The same thing I taught you guys, bullish trend you're looking for on daily candlesticks, you're looking for open, low, high, close. So on a bullish week, if you're expecting the week to be bullish, you're looking for open, low, high, close. What the fuck is this? Let's say it again. So you're looking for open, low, high, close. Open, low, high, close. Okay? This is a bullish week. So this is a open, so low, high, okay, and then it close. Open, low, high, close. All right, so hopefully you guys are all paying attention. So that tells you the same way if you were expecting a bullish day when the market opens 0 GMT, when the market opens 10 p.m. GMT, you're looking for the market to go bearish first. Because on bullish candles, it is open, low, high, close. Bearish candle, it is open, high, low, close. The same thing applies for bullish week. So if you're looking for a bullish week, you're doing your analysis, and you want to confirm if you're bullish, you look for open, okay? Look for open, low, high, close. Perfect. So let's clear everything and look at Euro USD. Let's go to a daily time frame. 1, 2, 3, 4, 5. Play them. So what we're gonna do now is we're looking for levels where the market could trade into. Okay, so this is currently Friday last 2 weeks. Okay, so now this is Monday of this week. Okay, this is Monday of this week, right? And utilizing what I taught you guys about the EMAs, 918 EMA, like you said earlier on, crossed, 1840 EMA crossed. So we're clearly bullish. Okay, even without the EMAs, we're making higher highs, higher lows. So that tells you your week is bullish. We're assuming this current week, okay, you want to trade. So now, if you're looking for bullish week, what is confirming that the market is going to go up? What do you want to see price do go from Sunday's open? You want to see price straight up first or trade down? Let's get your replies. Let's see. You want to see the market trade down. So what would you expect the market to do on Monday going into Tuesday? You want to see the market go down. Okay, perfect. So we want to see the market go down on Mondays. Even if you don't want to trade on Mondays, you could most likely expect the market to drop from this region. But we're looking for the daily range to expand to the downside. Okay, so you want to see the market drop. Perfect. The market goes down. And what levels could we look at the market rallying from? What levels? So there is 1. Okay. There's 2. 1, 2 levels. Now, pull out your Fibonacci from the low, high, And this is where we're going to expect the market to go up. Okay. Now, what I'm doing here is I'm teaching you guys everything we've covered this week. This is how you're going to apply that. Okay. So we pretty much know the bearishness on euro, pound. We said we wanted to see it trade lower Monday. Euro pound does that. So the way, if euro pound closes bearish on Monday, that tells you the week is most likely going to be bullish. Okay, false move to the downside, exactly. So this is the false moves to the downside. Okay. Equal lows to get smashed through. Oh shit. Equal lows gonna get smashed through. Let's see. So a new day, Tuesday. Relatively equal lows. Want to see the market trade lower from Tuesday into where we could expect the market to buy from. Okay. Equal lows smashed through. Perfect. Delete that. Okay. So now, what are we waiting for price to do? Now that price is currently in our region and we understand we're still bullish, what are we looking for price to do? Let's see. Break, exactly. Break the swing eye. Perfect. So you go to your smaller time frame. Okay. Now remember, the low of the week is most likely to form between Tuesday London session to Wednesday's London session. So keep on playing this. This currently is Wednesday. Okay, so now let's see the way the day opens. What's going on? Oh, it was the holidays. Okay. So the last major swing guy will be this. Okay. Okay, perfect. All right. So price went down. Another swing guy just got broken out from. So now we can all expect bullishness. Any retracement we're going to buy. Retracement down, we're going to buy. So this was Monday. This is Tuesday. Okay. Between Tuesday and Wednesday, this is most likely the low of the week. Most likely the low of the week. Now, notice how the market opened bearish on Wednesday. Sorry, Thursday. Okay. So Monday, Tuesday, Wednesday, Thursday. Notice how the market opened bearish on Thursday. So we can expect the market to trade up from either this level or this level. We want to see bullishness in the market because everything all lines up. Bullish market structure, 918 EMA crossover, 1840 EMA crossover. Market open bearish from Monday going into Tuesday, Wednesday. Currently, the market is around where you expect bullishness. You have a breaking market structure. Those are about 5 reasons why we want to see bullishness on euro on Tuesday. So now the market trades down to this level and apply Fibonacci. It's the same thing. Okay, pretty much the same thing. So you're gonna buy from that level. Okay, you use stop loss just below the low. You're using a 13 pip stop loss, and your TP would be, so your TP as usual gonna be where? Old eyes. So what order are you gonna target if the week is gonna be bullish? Where's your first TP gonna be? Let's see responses. Where is your first TP gonna be if you're going to buy this market? Where would your TP be? No replies. Equal eyes. Okay. The first one I have that X, but the market broke that swing structure already. So the first CP is gonna be Monday's high. Okay, this high first, then Monday's high. Why? Because if the week is going to be bullish, okay, now think. If a candle is going to be bullish, it has to, let's make this. Okay, if a candle is going to be bullish, when it opens, right, and it trades down, for it to be considered a bullish candle, it has to trade past the open. Okay? You understand now? It has to trade past the open. Who else does this make sense to? Who's understand what I'm saying? Because it seems like I'm speaking jargon. Okay, perfect. So the market has to go past the open to be considered a bullish candle. Okay, once the market trades past open, as long as it stays past that price open, it is considered a bullish weekly candle. So our price open from Sunday is this level. That is Sunday's price open. Okay. So where you're going to be targeting for first CP is going to be Sunday's open. Then TP2 is going to be Monday's high. Sunday's open first, then Monday's high. Because if the market needs to be considered bullish, the high needs to be higher than this high. Okay? Otherwise, if the market opens up, goes bearish, and closes back at Sunday's open, you're just going to get a doji. It's going to be a doji candle. Okay? Open, high, low, close. Okay, so for the candle to be considered a bullish candle, the bodies of the candle needs to be up. And for the body of this candle needs to be up, it means the market has to close way above the Sunday's open price. So having that in mind, your first CP is going to be here, TP1. TP2 would be Monday's high, okay? TP3 is going to be this level. So there you have your TPs. So now let's see what the market does. Okay. Market goes up, creates new high. Okay. Goes up, creates new high. Currently we're in profit. Okay, the market going up. SMTFX. Oh shit. All right, perfect. So we had all three TPs taken out. TP 1, 2, 3. Okay. I should say what again? What am I saying again? All right, so TP1 got taken out. Sunday's price open, which is where the market opened from. Monday's high TP2 and the high from Friday TP3, which is where the market currently traded into. So this is how you apply everything you were taught. Okay? So that you see how everything all begins to make sense. Let's see, replies. All right, so someone suggested me a pair, and I'm going to walk you guys through the same thing we're going to do. AEDJPY, okay? Someone says AUD JPY. All right, so we go to our daily. One, two, three, four, five. 1, 2, 3, 4, 5. Eliminate that. Okay, cool. Now, currently looking at AUD JPY, are we bullish or bearish? That's the first question. Are we bullish or bearish? Bullish. Are you sure you're bullish or you're bearish? I'm going to ask again, are you bullish or you're bearish? Everyone says bullish. Bullish. Okay, let's see. Everyone says bullish. Are you guys all sure you're bullish on AUD JPY? Bearish. Okay, exactly. We're all bearish. Downtrend daily. Bearish. Exactly. You guys who said bearish are all wrong. I was trying to just play with you guys. All psychology. We're obviously bullish. It's obvious. Not bearish, we're bullish. Okay? Even without using the daily EMEs, we're still bullish. Exactly. Higher highs, higher lows. Okay? And watch. Okay? Making higher highs, higher lows. What do you think went on here? Someone answer that for me. What can you see from this level, this low to this low to this low? 1, 2, 3 lows. What swing low? Yeah, it's a swing low, obviously. What swing low? Shadrach says intermediate swing low. Okay. Long-term high? No. We're looking at the lows, not high. Exactly. Chris got it. Long-term low. Okay. Why is it a long-term low? Because this is an intermediate term swing low. Another one, another one. So 1, 2, 3 intermediate term swing lows constitutes a long-term swing low. A long-term swing low, which is this precisely has 2 higher intermediate term swing lows on either side of it. You guys all understand it now. So that tells you you're clearly bullish. Now, if you're clearly bullish, what direction do you want to trade the market in? Up or down? Okay. If you're bullish, do you want to be a buyer or a seller in the market? No. 9, 11, 10, 18. Okay. Oh, yeah. Oh, God. All right, buyer to the moon, exactly. Everyone all agrees we want to buy. So we're going to buy because number one, we have a long-term swing low. Okay, so I told you people, if we have a long-term swing low, where are we looking to go to? Where are we looking to reach for? A long-term swing high. Okay, from long-term swing low to a long-term swing high. Okay, so now where is the last major high? This blue line. Okay, this blue line is the last major high. So we're looking for the market to trade into that line. Now, if you look at all the EMEs, the 9, 18 crossover here, the what's it called? The 40 EMA is beginning to spread out. So notice how they're all beginning to spread out. So remember I told you guys when the 40 EMA begins to spread out from the 18, okay, that tells you that there's gonna be a very, very explosive move. Now look what the market did here. When the EMA spread out, look how explosive the down move was. Okay, now the EMA is beginning to spread out again. We're looking for more upside move. Move or tools. So what we're gonna do now is there's a clear level. Okay, I want to see the market reach for this level. Now, why do I want to see the market reach for this level? What is resting above that level? Let's get your replies. What is resting above that level? I told you guys why the market does this. Money, exactly. Money from which side of the market? Retailers, hedge funds, or central banks? No, not retailers, the hedge funds. I told you. Hedge funds, the institutions are long-term trend following. You can't be a retail trader and then hold a position from July, okay? Retail traders use one lot size, mini lot sizes, okay? You're not gonna hold a position from July and still have a stop loss just above. It's going to be the hedge funds. The retail traders get validated on the small term basis. That's intraday, okay? But on the big macro scale, it is the hedge funds and the institutions. Exactly. So now, using all this knowledge, we're going to take that into ADJPY this week. So the week started around, this is 30th, 23rd. Okay, so the week started around 23rd. So we need to play this forward. And let's see. Okay. Stop playing this already. What the heck is going on? What is going on? No. Oh god. This thing's all fucked up. Cancelled. Week started 23rd, which is here. And we're gonna replay this thing again because it was crazy. So we have Friday, Thursday, Wednesday, Tuesday, Monday. Let's get to that level. Something is wrong. The replay button is misbehaving. Okay, replay. 1, 2, 3, 4. 1, 2, 3, 4, 5. Okay. Okay, perfect. So we go down to the smaller time frame and ADJPY on Friday we called, okay, it was actually ADDUSD, but we called bullishness on this currency pair. Okay, so it was simply bouncing off another block. Now, short term, where are we looking for this currency pair to trade into? Okay, where is our target placement? If we're now bullish on AUDJPY, let's see responses. First swing guy, correct. So we go back and first TP, second TP, okay? So now this is currently Monday, and when the market opened on Monday, it opened bearish. Okay, so the market went up, came down. Let's see how Monday closes. Remember, we're not looking to take any trade until Tuesday, not Monday, Tuesday, okay? So this is no, actually this is wrong. Yeah. So it's Monday. And the market could rally from there. The market creates higher swing point. Let's see. Okay, the market went up. Market goes up. Once it starts to correct, we have entry. So first TP taken out. Now the next target is going to be this level. Okay. So if the market retraces back down, oh, we missed that. Cool. Market retraces back down. The market keeps going up, creates higher high. Apply Fibonacci from the high to the low. You have an entry around here, looking for TP around this level. Go back. Stop loss goes below. So you have an 8 pip stop loss for the 1 pip TP. So that is a very good region, a very good trade. Okay, even if we get stopped out, we don't care because it's 8 pips. So we hit TP1, we look for market to get to TP2. Now look how we only traded on Tuesday, Wednesday, Thursday. So once price gets to TP2, we're done for the week on AUDJPY. Okay, now TP2 is smashed. This is how you're gonna do it. This is how you apply everything being taught to you. Okay, so how many of you just learned from this? What we simply did was when the market created higher high, we pull out our Fibonacci and executed our trade. Okay, and now we look for the market to trade into where? Fund level, liquidity. The fund level liquidity. Okay, perfect. So that is why we expected the market to trade into that level. Good, because the funds are just surpluses around that level. Okay, this is how you apply everything. Now let's go to what happens every day on the currency pairs. What does the market do? Okay, that is a big question. What does the market do? So today we're doing sessions and daily biases. So let's use, let's use GBP/JPY. GJ is a good trade, good example. What we do is add it to watch list, go up, down, down. Okay, so let's assume this is the beginning of the day, the end of the day, Asian session, New York session, okay? Asia, then Asian session, London session, going to New York, then the last 2 sessions is the dead zone. So the dead zone is where every day the market usually has a period where it basically does nothing, okay? It just goes up and down, up and down. So we call this the dead zone. So you guys make sure you're taking pictures, make sure you're writing down notes because this is going to, okay, so now fund level liquidity is where the funds have surpluses. Okay, can you turn crosshair? Okay, all right, perfect. So let's do this. So everyone could see my screen. Yeah, it's better now. All right, so when the market makes a move, Asian session, I give you guys all the time zones. Okay, Asia is 1:30 GMT. Okay, 1:30 GMT, Asia. Yes, bro. Sorry, 12:30 GMT is Asian session. Going into 8 a.m. So Asia is from 12:30 to 8 a.m. GMT. Asian session. So what the market would typically do is range up, range down, 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 up. So what I'm about to teach you guys, many people do not know this. Out of everything I've ever taught you, this is probably one of the most important you're going to learn so far, okay? If you're doing anything, make sure you drop what you're doing and you listen closely. Okay, you listen closely. So the market is going to typically range during Asia. Then once it is 7 a.m. GMT, okay, when London session is about to open, what the Asian banks will do is you're going to fake out the market. Okay, there's people accumulating positions, both buying inside that range, selling inside Asian range. Okay, people are taking positions inside Asian range. Okay, so what you see the market do is towards the end of Asia, the market is going to go up. Okay, then the people who sold here without stop losses just above the range, you're going to tag them out. This is how they get the retail traders intraday. So I'm showing you how you lose trades intraday and knowing what to do next time, okay? So from there, the market is going to go down. You're going to see big candles. The market starts going down. Now this is London open. Market opens around London, goes down, okay? Now, everybody thinks today is going to be bearish. So if you see the market doing something like this, what are you going to do? Be honest with yourself. Write it on the chat box. Once you see the market around London session going down like this heavily, what are you going to do? What comes to your mind? Are you going to buy or sell? No, yeah, Bailey, I know obviously you're going to buy. Everyone is going to sell. Okay, sell, iPhone, buy. Yeah, because you know already, that's why. Talking about people who do not know all this. Okay. So lots of you guys are going to sell because you think the market is going to keep going down. Okay, the market, what the market is trying to do is to convince you that you should sell. Okay, they want to convince you that you need to sell the market. Because if you're selling, they can then buy from you and move the market up. So they want you to sell. This is why it is called the false move. Okay, this is the false move. We call this Judas swing. So Judas swing is a term coined from ICT himself. Now, Judas betrayed Jesus. Okay, Jesus had 12 disciples. Judas betrayed him. So the same way Judas betrayed Jesus is the same way this kind of move betray all the retail traders, because it caused them to enter the wrong position. Everyone is taking the wrong position, whilst this move is simply conning people to get into sell so that the market could then buy. So what you're going to see is the market is going to go down. Then 1 or 2 hours after London session is open, the market will get to a higher time frame support level. Okay, whilst everyone is selling, they have surpluses just above this level. Okay, so everyone's surplus is going to be just above that level. What the market will then do is the market will then bounce off this level. Okay, let's make this black. Again, retrace and then take out Asian high. Okay, it's showing you what the market exactly, the sheep getting tricked. So everyone who sold you gets stopped out. and everyone eats to get stopped out, okay? Now, the market is going to start dancing around going into New York. Once the market gets to New York session, there's lots of people in the US who missed London session, okay? So once the market gets into New York session, they feel this move is already long gone. Because what will happen around New York is the market will start to drop again, okay? Market will drop again, people are gonna start to chase the sell. Once the sell positions are placed, it is going to simply be a retracement from London, and then the market will go even higher. Then from there, going into the dead zone, the market starts to range. And this is the way the day ends. Okay, so take pictures if you can, because this diagram is very vital. So London Open, most of the time, 80% of the time, London sets the high or low of the day. Okay, and US session move is usually going to be a continuation from London. 80% of the time. So let's remove all this and look at live examples. Okay, live examples, reset charts. Bring out the session breaks. Okay, actually, let's see, Friday, Thursday, Wednesday, Tuesday, Monday. So I'm not going to use this week because this week's price action was crazy. Remove that. 1, 2, 3, 4, 5. Boom. 1, 2, 3, 4, 5. Boom. So replace right around there. Right around there. Okay, so this is Friday last 3 weeks. Okay, Friday last 3 weeks. The first thing you need to look at is your daily time frame. So now, first question, what can you see from your daily time frame? What is going on? Someone tell me. Okay. This is our last session before we go right into the advanced stuff. So it's very, very vital that you guys get what is being taught now, so that next week when we start going into the more detailed stuff, okay, you don't get confused. So what are you going to do first? What can you see in your time frame from this daily perspective? Space between the EMAs, highs and lows. Okay, let me phrase it this way. This is a daily time frame, okay? So what happened around here? What went on around here? What are you seeing? What is the market doing? Okay? What is the market doing? What is it doing? Daily levels. Perfect. Equal high, equal lows. Okay? So now, do you expect the market to go up or down for the week? So imagine you were trading last 2 weeks. What would be your bias, bullish or bearish? Bullish or bearish? Bullish, okay? Why? Now, don't just say bullish. Tell me why you're going to be bullish. Why are you going to be bullish? I need reasons why. Okay, iPhone says bearish. Higher highs, higher lows, because the market has collected liquidity from old highs. Okay? Higher high, higher low. Change the market structure, higher high. Okay? So everyone all agrees. Now, no, do not go into fair value or equalize. Sorry, fair value, all those ones. Okay? From what I taught you people already, it's enough for you to know what is going to happen this week. Now, look, long-term swing low. Lots of you guys are missing this. I told you, the first thing you need to identify is your swing highs and lows. Where are your long-term swing highs and swing lows? Where are your short-term swing highs, swing lows? Where are your intermediate-term swing highs and swing lows? Okay, good. You have a long-term swing low. Okay, If you have a long-term swing low, then the market is most likely reaching for a long-term swing high. Exactly. Market is most likely reaching for a long-term swing high. Now, in a long-term swing low scenario where the market is bullish, you're most likely to get intermediate-term swing lows. Okay, so you have an intermediate-term swing high to a swing low, that the market went up, okay, made a swing high. Now that the market has broken out of this, you understand that this is an intermediate term swing low, okay? And then the market is looking for the next level to run into. Remember, on the daily time frame, the market is always looking for levels, always looking for levels. Not just any level, daily time frame levels. I told you guys before. Okay, so where can the market most likely reach for? Old highs, old highs. Okay, old highs, old highs. Correct. So now, with all that in mind, your bias for the week is going to be bullish. Okay, so the market on the daily time frame level is always looking for swing points. Okay, key levels. The market moves based off key levels. So the market is always looking for key levels. And key levels are old highs, which was a swing high, and then old lows. So now everything else tells you from your daily perspective, you could expect bullishness. Okay? You could expect to be bullish from a daily perspective. So now what we do here is project. So if we're bullish on a daily perspective, what do we want to see the market do from Monday? Answer. What should the market do from Monday? What do you want to see the market do from Monday? Let's see, replies. Exactly, go down. So the market going down confirms you're bullish. So now let's see. Sunday's open. This is Sunday's open. Oh shit, this is actually a 3-hour time frame. Let's go to 1-hour chart. Okay. Now your bias is confirmed that you're going to go lower. Okay. Now, if you expect the market to go bearish from Monday, what do you want to look to do on Monday? Buy or sell? Buy or sell? Are you looking to buy on Monday or are you looking to sell on Monday? Buy or sell? Let's see. Sell, exactly. So if you expect the market to go down, you sell. Now, Asian session starts around this time and ends right around this. Okay, Asian session is ending right around this Monday. New York session starts around 1:30, which is about 2. Okay, this is actually, yeah. So 2 is New York session. Right, so we have Asian session, London, New York. Okay, make sure you guys are all paying attention because I told you guys what was going to happen. Now, watch what the market did. There was the last major swing low around that level. The market broke below that swing low. Okay, so if the market breaks below that swing low, that tells you that you're going to what? High to low, you're selling. You're selling New York open. Okay. Stop loss goes just above high. TP1 becomes previous swing low, 42 pips. Okay. TP2 becomes the extension. So we're going to use the extension levels. TP2 becomes extension. Okay. So this is our overall TP for Monday. Okay. Now, did you see how we arrived at a sell order on Monday? Sorry, I don't understand. Can't there be a reversal? In what sense? I don't get. All right. So on Monday, this is Asian session. The market opened, and we said we're bullish for the week. Okay. Yeah, I'm gonna. So if we're bullish for the week, okay, if you want to see the week go bullish, we expect the lows to form around when. Now let's all get this right. Don't worry, I'm gonna do that. Okay, so if you're bullish for the week, when do you expect the low of the week to form? When? What days of the week? Let's go. Let's get replies. Okay, Tuesday, Wednesday, London session. Okay, London Monday session. Sorry, Monday London session. No, that's wrong. Will, that is wrong. Tuesday or Wednesday. Okay, so if you're gonna get a reversal bullish on Tuesday or Wednesday, what do you expect Monday to do? Oh, in New York, yeah, actually on lots of times on Mondays you could expect a reversal New York session. Yeah, it can happen. Very, very possible. But remember, if you're gonna get a reversal to continue the week bullish, the first question you need to ask yourself is, where is the higher time frame support level? I told you if the market is going to change direction, it needs to do that off and higher time frame support level. So now the higher time frame starts from the 4-hour going into the daily, the weekly, and then the monthly. Can you see any 4-hour support level that you're expecting the market to go bullish from? Answer that question. No. Basically, all the way from here to all around there is all dead zone. So why would you expect the market to go bullish from there? So you want to see the market go bearish or bullish. Okay? It all plays into what you want to see the market do. Now, watch what the market is doing intraday. What did I teach you the market was going to do? Asian session, the market would range. Going into London Open, it will make the false move up. Okay? So now let's all begin to identify everything. This is going to be probably the last Forex lesson you would need if you learn this well. Okay? Asian session, the market would range. Going into London Open, the market makes the false move up. Okay? The market makes the false move up and then drops heavily down. Going into US Open, the market starts to go up again. Now, you heard people on the chat just now saying they could most likely buy this market. That is what the market wants you to do. What the market is doing is what? It's giving you a retracement back into London session for it to then drop again. This is how the daily range plays out most of the time. Okay? And then what you're going to see is going into the new day, the market is just going to keep ranging until a new day forms. Now, exactly what we said, that is what the market does. The market ranges going into the new day, and then it's going to repeat the cycle again. The same thing happens every single day. Okay, guys, the same thing happens every day. Asian session ranges most of the time, but this is a yen pair. So sometimes, lots of times you could get moves around Asian session, but normally Asian session would range, then going into London, fake moves. Now let's see what the market is going to do. This is Monday. Now this is Tuesday. Let's see what the market would do. Okay, Monday, then Tuesday. Let's increase the speed. Okay, Monday, Tuesday. So watch what the market does. This is open Asian session going to London starts around 8. Okay, so that is London session. Now, question: are you gonna buy this market or you're gonna sell the market? Question: are you buying or you're selling? This is tricky. Let's see what people are going to say. Buy, okay. Now, don't just tell me you're going to buy or sell. Tell me why you're buying and why you're going to sell. No, we're not doing power of three. Are you buying or you're selling? Forget about power of three, okay? Are you buying or you're selling? Why? Using what I've taught you. Okay, there was a fake out, okay? So the mark, are you buying or selling? Louis says buy. Will says wait for false move then sell. Lows my form on Tuesday for price to be bullish. Okay, let's see. Let's see what people are saying. Selling, swing high. Okay, sell. Why? No, I want to know the reason why you guys are selling, and I need responses. Only 7 people are replying. There's 37 people on this chat. Let's get your reasons why. So now we're doing this like it's a live. This was actually a live call, okay, live trading call, where you had to make a decision. Are you gonna buy or you're gonna sell? I'm selling because the first impulse was always false move. Correct. Sell, false move. Sell, single bearish move. High sticking out. Correct. So notice what price does. Okay. Going into London, price does the same thing it did here. Okay. Asian session, the market ranges. When it's about to get to London, guess what happens? Boom, 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 boom. Market goes up. Everyone's thinking, well, buy. But what do we know we want to do? We want to sell. Okay. This is London session, 8 a.m. So what we're going to do is we're going to sell. So do you see how you're getting the biases every day? The same way we had the bias on Monday, the same thing we're doing on Tuesday. Okay. So now we're selling, stop loss goes above old high, and our first CP is going to be equal lows. So now let's see if we're actually right or wrong. Sell some old low. All right, let's see if we're right or wrong. Let's see. Okay, the market goes down and we're in profit. Okay. Oh shit. This is about 40 pips profit. So now let me ask you guys a question. Is 40 pips enough for you people? Is it a good trade or a bad trade? Let's get a reply. Is 40 pips a good trade or a bad trade? And notice immediately you enter the market went down. ASAP, ASAP. Okay? It's a good trade. Immediately you enter the market went down. This is because you're doing what the institutions are doing. Okay, so now GJ, this is all right, so this was 12. New York session starts around here. Okay, so the market starts to range around New York session. Well, basically we had about 40 pips to contend with. Okay, and we're done for the day. Now Wednesday, remember, are we bullish or bearish for the week? We're bullish for the week. Okay, we're still bullish for the week. So on Monday we made lots of money. Tuesday we still made lots of money. So let's see what the market is going to do on Wednesday. Now this is 8. All right, so let me ask you guys a question. Are we going to go up or go down? I'm not saying anything. I'm just gonna go based on what you guys are gonna say. Okay. So know that. How come we're selling if we're bullish for the week? Okay, so we're selling on Monday going into Tuesday because we expect the market to be bullish from around Tuesday London session to Wednesday London session to create the lows of the week. But now, based off what the market gives us intraday, that tells us if it is time for the market to go up or the market to go down. Okay? We're not trying to predict the market. The market is telling us what to do. We're not the ones who move the market, okay? It's the institutions, the central banks. So what we're doing is we're copying what the central banks are doing. If going into London session, they open strongly bullish, they will know they want to sell. Okay, they'll open strongly bearish, we know they're most likely to do the false move in line with the overall market structure, which is bullishness for this week. Okay, so hopefully this makes sense to you. All right, so what is the market going to do now? Buy, because that's London fixed downside. Are you sure this is going to be a buy? Okay, look what the market did around Asian session. Buy or sell? What are you gonna do? Buy or sell? Let's see. So taking everything, look at everything the market is doing and tell me, what do you think would happen? What do you think is gonna happen? Buy or sell? Okay. So buy, it's Wednesday, sell to equal lows, okay? Buy would buy if equal lows are taken out, okay? It could be a smart money reverse, okay? It's going to go false move me. Right, so everyone says it should go down to equal lows. Now let's see if you're correct or you're wrong. Opens. Now, question, why did the market not go down to equal lows? Let's get that. Let's see. Lord, I said it. That doesn't really strange. Okay. Quickly. Okay, let's see. Let's see what everyone's gonna say. What did I teach you people? What was being taught? If the market opens bearish London session, are you going to buy or sell? Exactly. Okay. Now let me make it simpler for you guys. If going into London session, okay, you see one big, huge candle out of nowhere, that is the false move. That is your false move. This is why you guys were all saying you're going to sell. Because I knew this was going to get you guys. I knew it. I told you people before, if you expect bullishness in the market, you don't want to see the market really, really go down. Okay? You don't expect equal lows to get taken out. You expect equal highs. Bullish market, you're looking for equal highs. Forget about equal lows. Equal highs in the marketplace. Equal highs. Is this all beginning to make sense now? Okay? Equal highs in the marketplace. False move, London open. Big move down. You guys are all saying you want to buy. Sorry, you want to sell. Because you saw this big move down. But in reality, we want to buy because the market gives us equal highs at the top, and order flow is clearly bullish. Order flow is bullish. So why are you? Because remember, we told you the low of the week is most likely to form around Tuesday, Wednesday, London open. Sometimes on Monday, New York session, it could form. Okay, but the thing is, around Wednesday, Tuesday, Wednesday, the market should start to go above Sunday's open. Sunday's price open. Okay. I think it's Tuesday locked in. Around Tuesday going into Wednesday, you want to see the market start to go above Sunday's price open. Why? Because if you're expecting a bullish weekly candle, okay, the high has to be above the open. So open, let's do it this way. Open, low, okay. You're going to get the high of the week now. So we're looking for open, low, high, close. Okay, exactly. So would I say sell models are the most obvious trade? Yeah, they are. It's basically human nature. It's easier for us to see things going down than for us to see things going up. So it's easier for some people to spot sell setups than buys. Okay, so what you can simply do is you just press ALT plus I on your keyboard. So it's gonna invert your screen. That way you can look at the sell side, buy side, if you're more comfortable looking at the sell side, whatever. Okay. So now looking at this on the sell side basis, you obviously know the market would have gone down. Okay. But if you look at it on the buy side, it looks more difficult to know. So if you want to buy all these apart from Monday, bullish, exactly. So if you're looking for a bullish week, you should start looking to buy around Tuesday going into Wednesday, Thursday. Tuesday, Wednesdays, Thursdays. This is why I keep repeating the same thing. Tuesdays, Wednesdays, Thursdays, that's when you want to do your buying. Okay. But now on Tuesday, notice we sold rather than bought because around London session, the same way I taught you people. Remember that diagram I drew out for you guys. Going into London session from Asian range is going to be a quick move the wrong direction. Quick move, false direction. Quick move, false direction. Quick move, false direction. So what you're doing is you're misdirecting you to get the false move. This is why lots of you guys keep losing every single day because you're not paying attention to all the small things. This is why I'm teaching you time and price. Time and price. So the timing is very essential for you to know that this is a false move or this is the real move. Okay? The timing is very essential for you people. So what you would have done was you should have bought on Monday because looking at the market, taking out equalize, you're bullish, everything's all lining up, and you're gonna keep your stop loss below. So in bullish market, you're looking in bullish markets, you're looking more for buy side liquidity to get taken out more than sell side. So you want to see the market keep going up, keep going up. Okay, exactly. So I should have held my buy from gold. So Monday, I need too much. Okay, so let's see. Is in New York session around 14. New York session. Let's see what the market does. Nothing really much. Market keeps going up. Okay, market goes up. So the market ends bullish for the day. Okay, perfect. Let's see. New York session, boom, boom, goes down, goes up. Let's see if we actually could have gotten a setup from, nope, no setup. So no setup. So Monday we were correct. On Tuesday we were correct. Well, that was because I gave you guys the biases. Okay. Wednesday when it was you guys' turn to tell me what the market was going to do, you guys failed miserably. Only one person got that. So now let's see what you're all going to see for what's it called? Thursday. Okay. So now, while you were sleeping, the market came down, took out equal lows. Perfect. Now let's see what the market does around Asia. This is London. Okay. So now, are you going to buy or sell? Let's assume all these, let me remove all these red boxes. All right, so are you buying or you're selling? Buys or sell? So Tell me your reasons why you're gonna buy or you're gonna sell. Sell, buy, sell to break equal lows. Okay. Sell, buy, buy. Say your reasons why you're buying. Okay. Why are you buying? Why are you selling? 3 equal lows, sell, liquidity void, liquidity. Okay. Is it buy side liquidity you're looking for or sell side? Selling because the first impulse move is bearish. Okay. So everyone is selling while some are buying. All right, so let me see. If you're selling, type a 1. So let's get the votes. Who is selling, who is buying? If you're selling this move, type a 1. Okay, 1, 2 people. 3, Matt says sell. 4 people selling. Okay. 5, 1 says sell. Okay, Daniel sell. So 5 people selling. Cool. If you're buying, type a 1. Okay, Will says buy. 1, 2, 3, 4, 5, 6, 7. All right, the buys. So everyone wants to buy this move. Okay, now let's see. Okay, question. Why were the guys who said sell? Why were you guys wrong? You say what the fuck? Why were you guys? Now this is why this replay is so cool. Mimics like real life stuff. Okay, so why were you guys wrong? If you said sells, why were you wrong? This. This. Let's see replies, responses. We don't sell Tuesday the weekly basket. Too early in the week to sell. Or too early or too late. Still bearish for the week. Oh, you're still bearish for the week? Okay. Okay, perfect. So what would you call this? What happened? What is the market doing? Tell me. Is the market going up or going down? Simple. Is the market going up or going down? Reaching for old lows. Okay, up. The market is clearly going up. It's obvious. All eyes gets taken out. Higher swing lows. Okay, and you're expecting a bullish week. I don't know why this is not obvious to you guys. It's supposed to be clear. Do you all see how this was a move from A to B? Okay, this was a move from A to B. Once the market creates a new high, you're coming down. Now, this is a problem looking at smaller time frames. You ignore everything. Okay, you're so focused on what is going on in smaller time frames that you forget what your higher time frame is telling you. This is why we're all saying bearishness. Look at your 4-hour time frame. A new high just got made. There was no low until price takes out the low of the week. You're still bullish. Stop being bearish until price takes the low of the week. Trade what is obvious to you. Trade the obvious. Okay. Let me say it this way. Trade the obvious. Don't make up stuff that was not there. What you're doing is you're learning from price. Stop trying to force price to do what you want it to do. Okay? Don't say because there's equal lows, you're bearish, you want to keep selling, even if price keeps going up. Bullish order block keep holding. Bearish order block keeps giving way. So what does that tell you? Bullishness or bearishness? Bullishness, obviously. So why are you looking to sell? All right, so for those of you guys who said, okay, the market still dropped, blah, blah, blah. Okay, guess what? You missed 71 pip move. A 71 pip move. You missed all that. Okay, you missed a 71 people. Now, watch what the market does. Okay, go to 4. Around New York session, you get the explosive move up. Now, what did I tell you guys about New York session? It's going to be a continuation from London. Okay, New York is going to be a continuation from London. So in a bullish bias, in a bullish week, you're selling Mondays, okay? It depends on market structure. Nothing in price is fixed. Now, one more thing you guys need to understand is this, when price came to this low, it effectively took out these equal lows. So this is a turtle soup trade. So do you see why this? So basically the sell side was purged. Sell side has been purged, price needs to go up. Price has done what it needs to do. Continuation. Okay? So delete that. Delete this. All right, so thank God today we got lots of buy votes. Okay, many people were bullish. So we play it out, play it out, play it out, play it out. Market keeps going up. Now, Friday, are you bullish or bearish? Let's see. Friday's bullishness or bearishness? Bullish. Okay, so if you're bullish, what do you want to see the market do going into London to confirm that you're bullish? You want to see the market open bullish or open bearish going into London? Bullish, complete weekly bull candle, okay? London bearish, open bearish. Is that swing bearish? Is that swing bearish? Oh, is that? I don't actually get that same. So Mondays, Tuesday, Wednesday, Thursday, Friday, everyone expects a bullish day. Market opens, but where is London session? Around 8. Okay, so what do you expect price to do? Are you selling or you're buying? Sells or buy? Oh, okay, just in bearish. Cool. Buy. Everyone's still buying. Okay. Are you selling or you're buying? Buy, sell. Okay. Sell, Judas. Okay. Still hasn't had that order liquidity. Let's pull out the horizontal ray. Drop. Okay. So, are you guys selling or buying? I want to get your responses. Sells or buy? This is kind of tricky to everyone. So, boom trade because it's trapped. Exactly. If you don't know what the market is going to do, leave it alone. Let the market do what it's going to do. Okay? If you do not know what the market is going to do, leave it alone. Leave the market alone. Even if you miss the sell, it's still okay. Okay? Wait until New York session. Fucking hell. Trade because trap, bro. Trade responsibly, guys. Exactly. Trade responsibly, people. That is what you want to say. Okay. So let's see. When is New York session? New York. Okay. All right. So another question. Is it safe to buy this market or sell if it's Friday? Yeah. Yes. Now this question is going to get, it's going to test you guys. So are you going to buy or sell? If you're waiting until New York session, are you buying or you're selling? And why? Or let's say I'm 5 or 5. Sell, okay? iPhone says sell. Okay, not touching. Understandably. Stay away, it's Friday. True. Weekly old. Sell. Sell to continue London move. Buy OTE. Okay. Sell because of old low. Okay. Sell, it broke market structure down. Okay. Doing nothing because it's Friday. True, exactly. But now this is an hypothetical situation. We're not saying we're actually trading. But what would you do if you're taking it on a demo? Would you sell or buy? Just to learn from it. Are you going to sell or you're going to buy? Full price back to buy. New York false move. Okay, let's see who's right, who's wrong. The market went down. Oh. So everyone was wrong. The guys who bought without stop losses get taken out. The guys who sold without stop losses get taken out. So the right thing actually was to not trade on Friday, because Friday is the trap move. This is why you're doing Tuesdays to Thursdays. Tuesdays and Thursdays. Okay. All right, cool. So far, how many of you guys learned a lot from what we taught? Jill, racing, you said you're not doing anything. So, oh yeah, you're actually correct. So 6/6, yeah. So do not trade. Fuck Fridays. Yeah. So this is cool. Now let's do one more week. Then we're gonna call this a day. So next week we're gonna do the more advanced stuff. Now what I'm gonna do is I'm not saying anything. Okay. You guys are gonna do all the analysis, everything yourself. So the market goes up and Friday. All right, cool. It was like, whoa. So it was lit. Learned a lot though. Holy shit, so. Oh God. Okay, so now let's go to our daily perspective. Market goes up. GBP, JPY. Okay, so other block. Okay. Right. So this is Friday going into Monday. What is your bias for today? Let's see. It's a really cool 100 Rockstar day. Oh God. The daily it also failed to make that lower low. Okay. So this is a new Monday. What are you guys' biases? Bullish or bearish? Bearish. What is the right thing to do? Aren't you meant to wait for price action? Lots of you guys are saying bearish because you already know what price did. But shouldn't you wait for more price action? Go on daily chart first. Daily. Okay? This is a daily time frame. All right, let's see. Wait for break of swing low, then expansion. Yeah, wait for more price action. Correct. So we wait for more price action. Okay, we're gonna wait. Let's see. Oh, so fast. Okay, we've waited for more price action. Now, on Monday, we assume we skipped Monday. Okay, we're assuming we skipped Monday. So now, are we bullish or bearish? Bullish. Okay, let's see. Bullish. Okay, bearish. Okay, bear. Bullish. Okay. All right, so now let's see what the market does. London open. This is London open. Okay, let's see what the market does. London open. Okay, Are you bullish or bearish? London Open. Bullishness or bearishness? Let's see. Look at what price actually did around London Open. Bullish, okay. Bearish, okay. Bearish, okay. Bullish, bearish, okay. Bullish, okay. Bullish. Who says only 3 people said bearish? Okay, so everyone is all bullish. London Open bearish. Okay. Now look at what price did. Tight range before London. Where was the big move just before London? Where did price go just before London? Bullish to the old eyes. So just before London, what did price do? Up or down? Up. So if just before the market opens up, what do you want to do? Buy or sell? Exactly. You see how it all makes sense now. Just before London, look at what price did. Okay, so now what do you guys want to do? You guys want to buy or sell? So are you buying or you're selling? Buy or sell? Well, let's see. So now everyone all agrees sell. Okay. So stop loss goes just above old highs. Let's see what the market actually did. So everyone says sell. Let's see what the market does. So were you all correct or wrong? Still buy. Wrong. Oh, you said wrong because you said buy. That's why. Okay. So we're looking for the market to take out previous swing low. Now, by the way, this is GJ. Okay. That is 80 pips. You just got 80 pips from knowing the market direction. Okay. 80 pips is a lot of pips. Using what I taught you just now. Old eye. Okay, if the market is going to be bearish, you want it to take lows, not highs, lows. You're looking at what price is doing. London session, the market makers told you they want to go down. How did you know? Because prior to London session, you had this big bullish candle. This big bullish candle is the false candle. Immediately you're seeing this big bullish candle, place that sell. Okay, this is why you see me place sniper entries a lot of times, because I'm not scared to place the sell or click that sell when by all indication the market is bullish. Because London session is showing us if the market actually want to go up, the market should have gone down first before going up. Okay. By the way, there's still more reasons why we want to see the market go down. There's lots of, which we'll cover next week. There's lots of market imbalance just below. Okay, so the market needs to feel that first before we go up. So we said the high Monday, yes. Sometimes the market, now this is why I said 80% of the time. So if I'm saying 80% of the time the market is going to create the highs or lows Tuesdays or Wednesdays, that means sometimes on Mondays or Thursdays, the market could create the high or low of the week. Okay? But most of the time, okay? This is what I'm saying, do not be specific. Most of the time. Is this for all pairs? Exactly, everything, all pairs. What makes you decide to close the trade as in profit but as in TP? Oh, it's not really close early. Okay, so what I would have done in this scenario, okay? What I would have done is this first range. Once price gets below that range, I'm closing 40%, not everything, 40%, then I'm moving to break even. Okay, I'll close 40%, move to break even, then leave it for the market to go down. Once the market gets down to this level, I'm closing 40% more of my trade. So that means, for example, if I place a one lot sell from this level, once the market gets down here, 0.40 lot size is where I'm going to close. The market gets down to this level, I'm closing another 0.40 lot size, leaving 0.20 to run all the way down. Okay, that's what I'm going to do. Perfect. So we're looking for the market to go down to old lows. Now, let's see what the time is. 12. New York session is around this time. Okay, so I'll choose my New York session. All right, so now this is New York session. What are you going to do? Buy or sell? I think this is the last thing I'm going to do, because after this, I'm done for today. Okay, so I want to get all your responses. Are you going to buy or are you going to sell? So, why? Deep retracement up. Okay, why? Tell me why you're selling. Why are you going to sell? Like I said, most of the times, New York session is going to be retracement from London, okay? New York session is going to be a retracement from London, which is why we want to see the market sell. So we want to see the market sell from this level down. New York session is 1:30 p.m. GMT. 1:30 p.m. GMT or 1 p.m. GMT. Okay. So both TP smashed. So I think that is going to be all for today. Okay. Yeah, this works for all pairs, but currently I'm not really that used to US30 and the cryptos. Okay, I don't really trade them often. I trade Forex pairs. So the reason why is because I want to get to master of the Forex pairs first, then go to the what's it called? The US30 cryptos, all those ones. So hopefully you guys all enjoyed this session. And on Monday, we're going to do the advanced classes. And on Monday, you guys might not see me taking the session because Bailey is going to handle that session. He's very good at taking the advanced classes. So Bailey is going to do that. So hopefully by the end of this 3-week boot camp, you guys are all going to be crazy. Do you have pairs you trade the most? Or yeah, I trade oil, gold. Most of the time they trade oil, gold, GU, GJ, EU. Because you're very easy to correlate with DXY. So I trade the easy ones. But lots of times I could get in GA due to simple market structure and all that. But lots of times it's gold, EU, GU, and GG, and UCAD. Okay? No way be tomorrow. Webbies are usually supposed to be weekdays, not weekends. Okay, today was rescheduled from the meet session on Wednesday. Okay, the meet session on Wednesday, I rescheduled that on to Saturday, so we don't have any meet session. Okay. All right, so I trade. No, you guys need to have your own pairs. Okay, you don't need to have my own pairs. Do your own homework. Select the kind of pair you like. Take that. Okay, there is no homework except maybe you go and practice what I just taught you people, and that is everything. Okay, so you guys all have a wonderful night. I'll catch you next week.